Hey traders, welcome back to another Sunday video where we go over trade setups for the week ahead. Please bear with me in this video. My voice sounds a little bit off just because I'm a little bit under the weather. I feel fine, but my voice sounds really weird, so I apologize for that. Anyways, in this video, what we're going to be taking a look at is a couple key setups for this week. And one area I'd like to start out with is the US dollar. You can see the US dollar here is trading just shy of 102.5. And despite all of the inflationary numbers that we got last week, the dollar index was not able to really pick a side up or down. And what I mean by that is that despite, CPI, which was hotter than expected, and PPI, which was cooler than expected, we saw a really choppy US dollar index. And of course, that carried over to many other markets, including the indices. The yields world was kind of more interesting, but most of the currencies world was pretty choppy last week. And the indices saw a little bit of indecision as well. Now, going into this week, what will be interesting for the dollar index is if we do actually end up picking a side. So I've got my zones marked up here. This is a 4-hour chart that I'm looking at on the dollar index. And the question is this week, are we going to get a break either direction in this dollar choppiness that we've been seeing? If we do get a breakout, it could give us a little bit of more confirmation. Now, I will be transparent and stay true to what I've been talking about on the channel. I am a dollar bear. I'm more bearish on the dollar. I think that the inflation trends are overall still coming down, that rate cuts are coming, and that until further notice, that is going to put pressure on the dollar index to the downside. Now, of course, I could be wrong about that. And if we do see a break of this structure, that is going to short-term tell me not to be a bear on the dollar and not to fight that move. So I'll be watching that really close. Taking a look at gold, we had some interesting stuff happen last week, and despite the dollar's choppiness, gold actually pushed higher towards the end of the week off of some Middle Eastern conflicts that we heard a little bit about, and that drama is causing a little bit of stir on the gold market. As we take a look at this chart, though, what we can see is that overall it's been kind of mixed, and on the daily chart we've been holding support well, but one thing I wanted to point out about this chart is that if you take a look at the 4-hour and you just highlight that we were in this kind of constructive downward trend, we had a little bit of a break in that structure here last week, which I'll be watching really close to see if that materializes into something bigger. I do like the idea of a possible gold pullback, and what I'd be most interested in would be a move back to like 2035, which was kind of an area of resistance. We can go ahead and draw that, what was supply. We can go ahead and mark that as potential demand going into this week after the big break of structure here that was to the downside. That could be an interesting one to watch close. The S&P 500 is still bumping up against that major level of resistance around 4,800, and after testing it twice this week, we saw price unable to close above. And despite me being a dollar, sorry about that, guys, I had to cut the recording for just a second. Despite me being a dollar bear, that mixed sentiment also impacted my idea on the indices, right? So the S&P 500, essentially, we saw a big, shoot to the upside there on the PPI numbers, a shoot to the downside there on the CPI numbers. There was some mixed sentiment, but nothing was able to really break that structure high or low. And so I'll be looking similar to the dollar for some clarity on direction this week. I did take a long trade on the S&P 500. I rode it on up, and I was actually trailed out of my trade on this candle here. So I am still a bull. I'm still looking for opportunities, but what I'd be most interested in is either a pullback into the lower limits of this supportive structure or a breakout and retest opportunity this week on the long side. And I'll show you a little bit of the reason why. The indices are getting a really strong bullish read on the Edgefinder right now. And if you're not familiar with the Edgefinder, it is essentially a software that assists us in looking at lots of different sentiment and economic data to give a more complete view of the market. Most traders only look at technical charts, but what we try and do here on this channel, in my trading and at A1 Trading, where Frank and I have built this tool, is we try to use data to our advantage. We live in a world of information. Why not use it to improve our trading by looking at the full picture rather than just only looking at candlestick charts? Trust me, there's a whole lot to the markets than just head and shoulders patterns. And while I do use technical analysis, I think it's very useful to use data to get a more complete view of the markets. Going into this week, we're getting a really strong read on all three of the indices, but I wanted to show you specifically something on the smart money tracker that could be really interesting. We call it the smart money tracker or the COT data. Essentially, this is a way to keep an eye on what institutional money is doing week to week. And if we scroll down to this table here, this is the institutional money flow, and I absolutely love looking at this. This shows us week to week the change in money on the COT reports. And notice that the S&P got a real nice bullish bid. You know I love this as I love trading the S&P, I love trading the NASDAQ, but seeing the S&P get a strong bid like this really solidifies my overall bullish view on 2024 for the S&P. We also see the Dow up there. That's great to see as well. And the NASDAQ was the lag of the three. We also have gold kind of being a bearish one week over week, so that's something to note. So I'll be watching the indices as the gates open this week. And again, overall, here's the net positioning. Now, net positioning is more of a longer term indicator because, again, these positions move and change very slowly over long periods of time. That's why I generally favor this secondary table that shows us the week-to-week change, which can be very useful for active traders watching money move in and out of particular assets according to institutional money, right? The big money, the smart money. What are they buying? What are they selling? And by the way, if you do want a copy of the Edgefinder, the link will be down below in the description. And if you use code YTVIP, you can get a discount off of the software just because you're a YouTube subscriber, and we appreciate your support on this channel. Another thing to point out about the COT report, it's not perfect. It's not, a holy grail by any means, but it can be very useful to track what institutional money is doing. At the same time, we can take a quick look at retail positioning and see what the crowd is thinking about certain securities. You can take a look at the major currencies here. We have some stronger bearish contrarian readings where retail traders are very long, and we get some more bullish readings where retail traders are very short. I've just gone ahead and also added the commodities here, and you can take a look and see gold is on there and oil is getting a bearish contrarian reading. Gold is a little bit of a mixed bag here, so not quite getting a strong enough read on that one. While we take a look at the currency pairs, we can see that Euro USD traded really flat, pound dollar traded really flat, dollar yen did make some moves last week, and on the daily chart, we have a little bit of a mixed kind of view here. We had a break of this downward structure recently on the dollar yen, possibly indicating some more short-term upward strength. But I am still a dollar bear, so I think upside is kind of limited here. And I overall think that the yen could actually strengthen in 2024 as they've indicated potential interest in being in the positive territory with their interest rate or even increasing it further. So if that does start to play out, meanwhile, the Western world is talking about rate cuts, that could actually really act to strengthen the yen. A quick mention on oil. It's been a very choppy market, despite some of the geopolitical tension that's going on in the Middle East. What this shows us is that the supply and demand relationship between oil right now is a pretty balanced area. There's both a large amount of demand for oil, but also a large amount of supply being produced. And remember, when geopolitical tensions come up, it threatens the supply, which can, of course, create a surge in the oil price. We did see that, but it also, again, moved back lower. So watching energy prices, of course, can be very, very useful when talking about inflation, which inflation is all the rave for interest rates, and currencies will trade largely on that. Same with indices as well as gold. And taking a look at the seasonality scanner, this shows us several different assets according to this current upcoming week, as well as this month versus next month. These are basically historical patterns generated by the Edgefinder. So we look through market data historically and we say which things are strong or weak during this period. What's interesting to me is that the VIX this month and next month is considered very bullish, historically speaking. Same thing with Bitcoin and gold, which again has me very interested in this latest gold move. I'm going to watch that close to see if a setup does occur. If I do end up taking a trade, if you guys are not already inside of our Discord channel, there is a link down below in the description to sign up to join that VIP group so that you get the notifications whenever Frank or I take trades. Again, information is down below in the description. You can get all of our notifications with full breakdowns and analysis sent directly to your phone or to your desktop. So we'll continue to watch some of this. Seasonally, we have some interesting stuff here during this period. Gold, NASDAQ, Bitcoin, historically strong this month and next month as well. So definitely an interesting area to watch. Also, while we're on the subject of top setups generated by the Edgefinder, I do also want to take a look at some of the bearish reads. If you're a currency trader, I thought this was interesting. a lot of Kiwi and Australian dollar actually pairs getting some weak reads. And if you're a dollar bull, this might be an area to look at, right? So if you're bullish on the dollar, perhaps you take a look at something like the Australian dollar against the US dollar and perhaps betting against this. One area of this that could be interesting to watch would be this level here, this 6685. If this does break to the downside, that could lead to sort of a zone-to-zone move on the Australian dollar and might be worth watching going into the week. With that said, guys, I know it's a short one, but again, I'm not feeling the greatest, and I appreciate you watching my videos. If my videos are helpful to you in any way, shape, or form, make sure to hit that thumbs up button if you appreciate the work that I do. And remember, you can get access to our software, Discord, or anything else on our website, a1trading.com, or in the description down below. Have a great trading week ahead.